Hello everybody, December 19th, 2022. We're going to take a look at Bitcoin. Let's take a look at what I said on Friday. Video was titled, There's the Dump Finally. I had the prior week grabbed some longs 16,875. I took my profits in that 17.5 to 17.8 area. And then I said on Friday that I had gone ahead and shorted in this area. I've got shorts. I think 18,250 is my average on those shorts. I am still riding those shorts. And on Friday, the micro picture was a little bit hard to decipher, and I had two scenarios here that I'm just going to go over real quick. This one has gained significantly in probability now. On Friday, we had just seen what I thought was wave 3 of an initial 5-wave decline. So we needed to see a wave 4 bounce, which we did over the weekend, and then a move down for wave 5 of 16 to 16.3. And we did just hit that a couple hours ago, actually. Hit that 16.3 area. So I said at the time, as long as Bitcoin remains below 17.2, that's my primary scenario. So obviously it did do that. And now we can go above 17.2 at this point. We've hit this target. That's the most important. We've got 5 waves down. So I'm going to go over what the next steps are for the bearish scenario. The bullish scenario that I view as quite unlikely is that 5 waves in a diagonal from that 15.4 low that we hit up to 18.4 could be a leading diagonal, and we could be in the larger degree second wave. It just didn't really look like it, and I'm even more skeptical of it now. It really does not look like 3 waves down. I'll go over that on the chart here just so you can see what I'm saying. So that is just an overview of what I said on Friday. So let me go over the bullish scenario real quick here, because that just is extremely unlikely. For that to be the case, this has to be 1, 2, 3, 4, 5 in a first wave instead of this yellow C wave. We would then need to see a C wave, or sorry, an ABC down and a second wave. That's this blue here. We'd need to see 3 waves down for that, and it needs to stay above 15.7, ideally above 16K. So technically we still are above that level, but I do not see something that looks corrective here. This does not look like 3-wave corrective structure to me, and so this makes this even less likely. This looks a lot more like 5 waves now, right? So I had on here this blue ABC. If we had just stopped there and gone up, that could have potentially been true. Now that that is out of the question, I'm going to delete that. I'm still going to put my 2 here just in case it does something goofy. I mean, this could turn into maybe an expanded flat, A, B, C. If we saw something like that, that rises in probability a little bit. But as of right now, I'm viewing that as highly unlikely, as I said. So just going over the bearish scenario then, since I don't think that blue bullish scenario is going to play out. The primary bearish scenario is that this was the C wave end to a correction upwards, and we're now beginning our next leg down. And for this to be the case, we needed to see 5 waves, which I think we can reasonably say this is. I even see potentially 5-wave, micros inside each of these, 1, 2, 3, 4, 5, right? I see those sort of 5-wave micro structures within each leg down, so that makes this even more likely. And every bit of move upwards was corrective. We saw ABC correction and then down. And this obviously held that 4th wave zone really nicely. We spiked up into it right there, and then came down and spiked into that 5th wave zone. So are we done with this 5th wave? I think the chances are good that we're done. We've bounced up decently high now at this point, but it could take another dip down into that area, or it could just keep crashing. I mean, that's always a possibility too, I suppose. But for now, I'm going to assume that's the bottom of 5. We're going to maintain that as our 4th wave, just trying to spread these things out, make it a little more clear. This was C. All right, and we're going to delete this because this no longer matters. The only thing that would have saved the bulls would have been had we not visited this area. Had this gone up in an impulsive move off of this low, the bulls might have had a better chance. As it stands, they do not have a great chance. So I'm going to go ahead and delete that line because it's irrelevant now. Orange and red line are going to stay on there. Those really are, the lines in the sand for the bull case at all, to stay above, ideally above that 16,050, but definitely above 15.8, give or take. All right, so next steps in the bearish scenario. Let's assume that we've already struck the bottom. We're going to draw fib down, and we're going to look for the 382 to 618 area as the ideal region for a second wave, a larger second wave bounce to go, right? These 5 waves are wave 1. We should see a wave 2 that looks something like this into that green zone. It can go as high as 17.6. It could even go as high as 17.8. The 764 is sometimes visited. I have a hard time thinking that we're actually going to get there based on what we've seen, but you never know. The real key for the bears at this point, they honestly just need to keep it below 18,136. That is what the bears need to do. And a warning to the bears would be if it got above 17,870. So that, I'm going to put that just as like a blue warning sign for the bears there, and this should be red. There's our resistance zone. And so basically what this says to me is that this area right here is a phenomenal shorting opportunity. I already have shorts running from 18,250, but I am going to add shorts anywhere in this zone with a stop above 18,137. So my average, at 18,250, I've got some there, but I'm going to be adding a whole bunch more here. So my average sell, I'm hoping to be somewhere around 17.6 or so, including those 18,250 sells and everything I put in here. I'm hoping to kind of have my average sell be that area. And if that's the case, that's my entry. My stop loss is right there. I just want to show you why this is such an incredible opportunity here. Let's assume that we go that entire zone. I don't know if we're going to or not, but let's just say we get up to 17.6. Okay, this would then be wave 1, wave 2. Our wave 3 is going to target, this is just wave 3, not even wave 5, at a minimum 14.8. That's a 4.8 to 1 reward to risk ratio. More typically, we would see it go all the way down to 14.4 to the 1.618. It's a 5.5 to 1. Okay? And if you ride it all the way down to the expected 5th wave zone of the 1.764 to the 2.0, that's like 6 to 1 or possibly 6.75 to 1 reward to risk ratio there. So really a fantastic setup here. Lots of outsized reward versus the risk that we're taking on this. And obviously, I always suggest not risking more than 3% on a stop out of the total portfolio. And typically, I don't risk more than 1% a lot of the time. So the other thing we can do to make this even more of a slam dunk is just watch how this action forms off of the low. Assuming we do begin a bounce and we start coming upwards into this zone, we should see it happen as 3 waves. Once we have 2 in place, we can get an even better target for the 3rd wave. Let's just assume that that's what it does right there. It does something like this, right? And that's going to give us an even better target, which actually lines up exactly with that first target. But it doesn't necessarily need to do something so exact. But basically, once we have that A wave and B wave in place, we can get a more clear area for that C wave and kind of focus our efforts on that area. If it happens to be up a little higher, we focus our efforts on shorting a little bit higher. If it happens to be a little bit lower, maybe we start putting in a little bit more further down, lower in the zone instead. So that's how I'm playing this. That's my expectations going forward. As long as we're below 18.1, we are very likely going to see 12 to 13K, or 12 to 14K, sorry. And at this point in time, depending on where this goes, let's just say it gets to the bottom. The deepest this could possibly go is about 13,276, based on normal proportions. Of course, things can extend. This could go even further. I mean, a third wave could take us down really deep. It could get us down far. So we kind of have to wait and see how this third wave plays out to really get a target. But as far as like normal proportions go, we would expect the 2.0 at 13,276. So that's what I expect right now. Somewhere in the range of 13.3 to 14.3 kind of covers all of our normal possibilities, with the possibility of it extending downwards too. All right, I think that sums up Bitcoin. Let's see if we can just see a nice little bounce here over the course of this week into that second wave danger zone, and then we'll touch base again on Friday and see where we are, and we'll go from there. All right, everybody, have a great night. I will talk to you then.